Hey guys, welcome back to Clownfish TV. This is Neon. I am here with Geeky Sparkles.
Hello.
And Silicon Valley has failed. Silicon Valley has failed. Yes. The day of reckoning is here. The day of reckoning with a capital W is here. And pretty much everything we've been talking about on this channel for the last couple of years, it's coming to pass, because we said that there's so many tech companies and especially digital media companies propped up artificially with venture capital. And now that the venture capital is being yanked away from them, they're going to fail. I think these companies are going to fail.
Yeah, put another coin in the Clownfish's right jar.
Yeah, you're going to have to, because we're not going to get any venture capital, so you guys are going to have to give us some coins. No, we're going to talk about this. We're going to talk about how it pertains, mostly to digital media, because we talk about that a lot on this channel. And I think it's going to be a domino effect. We are not going to know how catastrophic this really is until next week, the week after, when we start to see a lot of people scrambling, a lot of companies scrambling to get their money back. Because, the bank was insured, but only insured up to $250,000 FDIC.
That's it.
And a lot of these companies had hundreds
per account or
per account.
Oh, I thought you meant total. I was like, holy, what the heck?
No. But the thing is that a lot
that makes so much more sense.
Yeah, but even then, that's a drop in the bucket. That's not even payroll. Yeah, we're talking
people have millions. Yes, I know.
They had hundreds of millions of dollars. In fact, Roku, 25% of their money, their liquid assets, were in this bank, and it failed. Apparently, people are having a hard time getting money out of it. There's a huge bank run now. Everybody's flipping out about the banks failing. This is the worst it's been since 2008.
So are people flipping out of banks other places too now because of this?
Yes.
Oh no.
So this is gonna have a long tail. This is basically 2008 all over again, but this is the tech bro edition. Back then it was the housing crisis, the mortgage crisis.
Right.
And again, it was twice in a row now, we had business models that were not sustainable.
I think this seems worse to me than what we were seeing with the housing.
Oh, it's going to get bad.
Yeah.
We're going to talk about it. Hopefully we're still here in a year. We're going to talk about it.
Don't scare me like that.
Well, we'll see. Maybe YouTube will go. But what's the term we like to use?
Tits up.
Tits up.
That's what you say.
It's going to go tits up.
Don't scare me.
All right. So before we get into it any further, please subscribe for more pop culture news, views, and rants, guys. Over 297, almost 300,000 subs.
300,000, we'll do a live stream.
Yeah, we'll do something. I've
been saying live stream, so if there's more, that's up to Neon.
We'll do a live stream. We'll do an OnlyFans, because we might have to.
No, we're not doing OnlyFans.
No. Anyway,
okay, you do OnlyFans, I'll watch.
Well, there we go. You're my only fan on the OnlyFans.
That was a nice save.
Private stream.
Oh,
just for you.
Oh, I get a stream too? Just stop.
Talking about anyway.
Let's talk about banks.
Let's talk about.
Because nothing makes you hotter than talking about banks.
Yeah, right. Here's how the second biggest bank collapse in U.S. history happened in just 48 hours, coming from CNBC. We'll give you a little bit of an overview. Now, I don't know all the nitty gritty of this. I've been kind of watching it. I don't think anybody knows the whole story. I don't think we're really going to know how catastrophic this is until next week, when people have time to, really pull it apart and look at it. And then we start to see how these companies were affected. Because of course it happens, on a weekend or going into a weekend.
Yeah,
and it's like, whoopsie doopsie, we don't have any money, guys. So a lot of companies scrambling to make payroll. We've got a list of companies that are running out of money. I guess Etsy had a bunch of money into it, and they're telling vendors that they're not paying them until.
I mean, there are people that are selling on Etsy aren't getting paid?
Yes, they're not getting their payouts. So Roku, again, had 25% of its money in there.
That's hard, though, for Etsy people, too, because especially a lot of people that are on there selling are, like, independent, like, small mom and pop type businesses. And for them, some of them, that's how they make their money. I mean, this is bad. So this is what is going to happen, I think, because a lot of this is because of venture capital, VCs. Right. And they've been propping up Silicon Valley artificially. Well, Silicon itself, name. Right. Artificial. And it's monopoly money. And it's basically just pushing the money around. And a lot of these companies that have been around for a while, a lot of these tech companies aren't actually profitable. Hell, even Patreon's not even profitable. And they're just skimming money off. We've been saying that for years. That was before all this crap. Yeah. So we're going to see a huge
shakeout in digital media companies
Well, then they were
and tech
getting
companies.
valuations, but it was nebulous valuations that said they were worth more. A lot of times, I think they actually were.
Yeah.
That was all related to this. And now
Yes.
when you look at it honestly, the emperor's not wearing any clothes.
And there's a website for that, yeah. But no, it's look, this was never sustainable. I was looking at this because I worked in software before all the venture capital bullshit started, right? Mm-hmm. And it was just kind of started after 2008, 2000, I'd say around 2010, 2012 is when it seemed like it really started to ramp up. And now the piper needs to be paid because usually what's so funny about the piper?
But you're sitting there, okay, this is a me problem, but you're sitting there talking about, I worked in software, and I'm trying not to say, but now you want to work in hardware, am I right? And then you go, the piper, and I'm like, oh boy. So,
as he put his lips on the
I'm having a whole internal dialogue going on that I'm trying very hard not to say out loud, but I said it out loud anyway.
This is serious.
It is. I feel bad. I feel really bad for a lot of people right now.
Oh, a lot of people. Okay, you thought it was bad before. You thought that a lot of people were getting laid off in tech before. You ain't seen nothing yet, sunshine. It's gonna get
And I feel bad because a lot of people are going to be in big trouble here.
We're gonna see entire companies just close shop because the money's not
there.
there.
You know what sucks? What sucks about this and always happens is there are protections in place for the corporations.
Yes.
But not for the poor people who get trampled on
Nope.
when this kind of shit happens because the people above were like, playing with monopoly money. Mm-hmm. I mean, technically, that's basically what it was, monopoly money. And then when it all comes crashing down, the house of cards, people that are like the ones that work there are the ones that everything's going to land on. And the people that were at the top gets flit away.
So here we go. This is, again, this is just a very bird's eye view. We're going to talk more about how this is going to affect the media, because it is going to be catastrophic. Boo-hoo for some of these outlets, right?
Right. I mean, some people, yeah.
But still. Okay, so the company's downward spiral began late on Wednesday when it surprised investors with news that it needed to raise $2.25 billion to shore up its balance sheet. Because what they've been doing, as I understand it, is they've been lending out a lot of money because a lot of these tech companies don't have the revenue coming in like they did before. And basically, the lie of Silicon Valley has caught up to them. They have been lying for years about how much money.
The last couple times it caught up to them, people would stop buying into the lie, but here we are.
Well, they are. A lot of investors, in fact, people talk
now. But I'm like, the Silicon Valley's had crashes how many times? And then here we are yet again.
I mean, this is going to make the dot-com bubble look like suds in the dish soap. Like never mind. It's going to be bad. It's going to be bad. It's going to be really, really bad. Oh,
it's
speaking of suds.
Calm in comparison. Anyway.
Speaking of suds, we watched that Paranormal Caught on Camera.
Yeah.
There's that one. Did you see that one where they were filming a dish soap bubble and they were trying to say it was an orb? They're like, it came out of our sink. I think it's my grandma. Talking about scams.
No, it's Dawn.
It's Dawn. My grandma's name was Dawn. Anyway, this was a hysteria-induced bank run caused by venture capital. Ryan Falvey, a fintech investor of Restive Ventures, told CNBC. All told, customers withdrew a staggering $42 billion of deposits by the end of Thursday.
Okay, so let me get this straight. So because they said that they might be $2.25 billion low to shore up the balance sheet.
Oh.
Which is a big deal, but wouldn't have been so bad. Everybody flipping panicked. So it's like,
bank run.
Yeah, it's like the Great, that kicked off the Great Depression all over again.
Yeah. So, the best analogy for those of you who don't know what a bank run is, go watch It's a Wonderful Life. Mm-hmm. And basically it's when everybody, because the bank doesn't have, even though the bank supposedly has all this money that people are depositing, they really don't because they lend it
out to other people.
They lend it out.
Venture capitalists.
Yes.
Who might not ever get the money back. So you gave them your money and they lend it out to people that maybe might make money on it.
Yeah, so then what happens is people come in, they basically clean the bank out, and then some, and they're like,
money back now.
Whoopsie doopsie, we don't have it. We gave it to Facebook. I don't know when we're going to have it, and this is where we're at. So those who remain with SVP face an uncertain timeline for retrieving their money. So again, the FDIC insures up to $250,000, which for these tech companies is like nothing.
I mean, it might help.
Really
if you have some people that are individuals, it might help them. But yeah, it's not going to do jack for the tech companies.
Yeah, within 48 hours, a panic induced by the very venture capital community that SVP had served and nurtured ended the bank's 40-year run. So 40 years of venture capital being doled out at the Silicon Valley Bank. ended in a day of panic.
That's wow.
Regulators shuttered.
It's something you never think you'd see now. Like you wouldn't think you'd see that in this day and age. Like, back then, okay, I can see it, but now you wouldn't. You don't think that's something you'd see again.
Here comes the Brinks truck. There's not enough in it to. But then it led to bank runs in other banks. I think Boston. I read there was one in Boston that people were. So they're basically flipping out. They're like any bank that deals mostly in like venture capital and stuff. They're flipping out, and people are taking their money out. Regulators shuttered SVB Friday and seized its I'm having a hard time with that. And seized its deposits in the largest U.S. banking failure since the 2008 financial crisis.
Yeah, this sounds worse to me than that, but I could be wrong.
I think it's going to be.
I'm not an economist, so.
I think it's going to be. And the second largest ever. The company's downward spiral began late on Wednesday. They surprised investors. Yeah, they need to raise $2.25 billion. Whoopsie doopsie. Even now, as the dust begins to settle on the second bank wind down announced this week, members of the venture capital community are lamenting the role that other investors played in SVP's demise. This was a hysteria-induced bank run caused by venture capital. This is going to go down as one of the ultimate cases of an industry cutting its nose off despite its face. Yeah, it's been around for 40 years. The episode is the latest fallout from the Federal Reserve's actions to stem inflation.
I would argue, though, hiking. You might not have seen such a response had everything been stable. But it hasn't been. The venture capital stuff has been very tumultuous for a while now, which we keep bringing up. That it's not working and it's running out of money and it's probably not good. And so because of it being unstable to many people, that's why they panicked. Had it been a stable, had it been stable and viable currently, we probably would not have seen this happen. But that just goes to show you that everybody knows it's unstable right now and they flipped out.
The problem with all these tech companies, media companies being propped up by venture capital is they dole out much more than they get back in return. You might bankroll 10 or 20 startups and only one of them has a shot at being profitable.
And you might never get that money back.
Most of the time they don't. I mean, I was talking about Tumblr yesterday in relation to Twitter. Tumblr, I think it was Yahoo or Verizon bought Tumblr for $1 billion. And then within 2 years' time, it wound up being worth $3 million. And WordPress scooped it up for next to nothing. I mean, these companies rise and fall like that. And so many of these media companies, Disney and Universal have already gotten hosed on like Vox and Vice. And any chance that these companies had of getting sold at this point is probably off the table.
Well, BuzzFeed didn't help either.
No, BuzzFeed, I think it's hilarious. The head of BuzzFeed was out there. He was like, we just need to ride out the wave, guys. It's going to be okay.
Well, that's what they're going to tell people because the people flipping out is what's causing the wave to grow.
Yeah. Yeah. So now the story is going to be tech startups are a waste of money. People already knew it.
It already has been. That's why tech bubbles bursting before this. People were pulling their money. The venture capital was running out. They weren't getting more from most places.
Nope. Well, BlackRock put the kibosh on investing in certain kinds of companies. A lot of places I know stopped investing in media companies because they're like, we're not getting a return on these stupid, worthless, hot take clickbait farms. And then the ad revenue was running out. The banner ad, which we're going to talk about because this is what the domino effect is going to be. There are going to be a lot of people that lose jobs in social media, whatever. I think digital media is going to be the hardest hit. I think we're going to see, and we've already been seeing a lot of these websites get shut down. I think we're going to see an implosion like we have never seen before. I think so many of these websites are going to just collapse.
That's fantastic.
So they said the ramifications could be far-reaching with concerns that startups may be unable to pay employees in the coming days. Venture investors may struggle to raise funds, and an already battered sector could face a deeper malaise.
Great.
So it's gonna get pretty bad. They said that right now the fallout is spreading around the world because they have other banks.
UK firms are getting hit.
This is what happened with the bank run in 2008 too. It started with the housing crisis, and then it kind of spread out. I
mean, again, this too shall pass eventually, and it will come back, but it could take a while,
And
it'll be different too.
A lot. I mean, there's so many. They're going to do documentaries on this. Vice isn't going to because they're going to be out of business, but other people will do documentaries about this.
There will be a lot of new regulations put in. Yes. There'll be a lot of checks and balances will be put in. It'd be like the housing thing. Mm-hmm. The banks are getting away with all kinds of shit forever, and then after the thing blew up, then they a lot of the CEOs got away with it, but then they put a lot more restrictions on to try to make sure it doesn't happen again. So you're probably going to see a lot more restrictive venture capital guidelines going forward.
Yeah, I can almost guarantee that because it's so much harder now to buy a house than it was before 2008. And that was the problem. 2008, they were giving out jumbo mortgages.
They're setting people up to go. So
Yeah.
that the banks made money. And
Right. They could write it off and be like, yep, whatever.
So, I mean,
that's what I
people
think.
aren't going to stand by.
Well, I think that's what's happening here, too. I think these investors know damn well that most of what they invest in is never going to turn a profit, and
It's just moving money around.
it's a Ponzi scheme. It's all,
Pretty much.
and now, again, it's here we are, guys. Here we are. So here's what I really wanted to get to.
That's funny. How to run a modern media company, bank crash edition.
Yeah, so all of these websites, all of a sudden, they're starting to freak out. There was the guy, was it Jonah Peretti, I think his name, whoever, the guy who was in charge of Buzzfeed, Buzzfeed, which was kind of a precursor to all this. Hey, we're going to go public. People are going to pay us for our shitty listicles and or whatever. And their stock just died on the vine, right?
So this is funny because the information was a SVB customer.
Yes.
Oh,
Most of these media outlets, digital media outlets were, because they're all bankrolled by Silicon Valley. But my takeaway from this was this part right here. We're far removed from the salad days of media ownership, when a publisher could pretty much flip a switch and make money. Google and Facebook ended that era a decade or more ago. Now the key is to be so indispensable to readers as opposed to advertisers that they're willing to invest in your success through subscriptions. The information has leaned into that model, and increasingly so has Meredith Kopit, Levian, CEO of the New York Times Company.
Basically, you mean like it existed before?
Yes. So we have come full circle. So the internet made a lot of information free, and it was advertising supported. Unfortunately, that's not really a viable business model, especially with ad blockers, and a lot of these companies, to boost their numbers, scamming advertisers. I'm 100% honest. I think Facebook especially was scamming advertisers. So now it's like, well, you know what we should try? Golly gee, maybe we should try just selling our news. Maybe we should try selling magazines.
There's this thing called a newspaper.
Newspaper. Yeah, we'll charge people for news. Hot damn, that's going to work. The thing is, 95% of these websites, nobody is going to pay for their content.
Yeah.
It's noise. It's junk.
A lot of them, the reason they became worthless was because, as we've been talking about for years, we watched our show, it's that they've instilled people that weren't there for journalism or for news. They were there for agenda, and they got a warm seat, a warm podium that they scream from, and they ended up chasing away a lot of their long-term customers who wanted the truth and wanted the news. And now you got what you paid for, basically, and you're falling off a cliff.
This is what happens when you have the luxury of seemingly infinite money. You can hire people that don't turn a profit. You can hire people that actually drive your readership away, but that's okay, because if you're not making enough ad revenue, you can just go dip into the venture capital and pay for another 5 years.
Yeah.
And that's what they were doing. And it just, now
it comes due sometime,
You have to pay the piper at some point in time. And the piper might want a private OnlyFans stream. You
trying to see I'm paying attention?
Yeah, I was.
I'm sorry. I'm playing with your Transformer. He's got.
By Transformer, we mean actual Transformer.
He's got some guns.
Yes, it's Starscream.
He's cute.
Fiddling with little Starscream.
I'm sorry, I'm playing with your Starscream.
That's okay.
Anyway, I won't touch him anymore.
You can touch my toys anytime you want.
I'm sorry. He was there.
I've lost my train of thought.
Because now you're gonna have OnlyFans where Kiki Sparkles plays with Transformers. You'll be like my only subscriber.
Ooh, I want to see some headmasters. Come on.
Wait, so you lost your train of thought because you're trying to think of some swarmy comment to make.
I was.
Anyway,
train of thought. You bought me some Masterpiece trains, and they're very nice.
I did. They're nice.
I need to put those up.
Anyway, back to the important things. We keep them distracted because,
Yeah, so the important thing to know is that if people aren't willing to pay you directly for your stuff, and you're not turning a profit, you're eventually going to go out of business.
Yeah.
And
well, we saw this with webcomics. Like,
yes,
it was I think you said the other day, I didn't see that video, but webcomics was something we ran into this with, where the business model was basically advertiser supported and ad supported. And what happened was some individuals who had later admitted they did it kept clicking their own ads repeatedly, to the place that the ads that were paying on these sites realized that a lot of the traffic wasn't real. And they cut back a lot of the good ads from that vertical. And then when other people came into webcomics, the money wasn't there. So there was no way to support it, short of like, which Patreon came on later and stuff like that. But it wasn't, for most people, it wasn't enough to worry about or support yourself with.
Yeah. So we talked about that. Before we talked about webcomics, and I talked about actually yesterday in relation to Twitter, that it feels like a lot of people moving away from social media and going back to their own websites. It's like they're rolling things back. Now they're rolling things back even more like, hey, let's go back to actually, subscribing to things that we enjoy. It's worth paying $5 a month for something that we actually like versus, the Mary Sue or BuzzFeed or whatever. And nobody's going to pay for BuzzFeed. So BuzzFeed, if that's what you're thinking, you're like, we just need to ride out the wave. Oh, you're in for a rude awakening, sunshine.
It was bad before. It's going to get worse.
Oh, it's going to get so much worse for them. So Roku, which I freaking love. I watch more Roku channel, I think, than I watch anything else at this point. Well, a quarter of their money was in this bank.
Oh, no.
According to the Daily Beast. In a filing, Roku reported that SVP held roughly $487 million of the company's cash. Roku, which sells streaming devices and releases original content, has around $1.9 billion, which means SVP held about 26% of the company's money. The company's deposits with SVB are largely uninsured. At this time, the company does not know to what extent the company will be able to recover its cash on deposit. So they don't know if they can get their money back.
Yeah, because if the bank stayed around and the bank didn't close, you could hold tight and eventually it would probably be okay. But you said they went out pretty much.
Yeah, they got shut down. So again, the FDIC will insure you up to $250,000. That's nothing compared to that's probably their payroll for the week, if not more.
I'm sure it's more than that. Yeah.
And they're effed. Vox Media. This is one that's been struggling. This is what I'm talking about. We're going to see Vox, Vice, BuzzFeed, all these things are going to get obliterated, I think, in this. Vox Media, the publisher of New York Magazine, The Verge, and Group 9 Media, reportedly had a substantial amount of funds held in SVB.
Oh, no.
A person close to the matter told the New York Times. Again, we're not going to know until next week or the following weeks how bad it is, but Vox was already struggling to stay afloat, find a buyer, Vox and Vice and all these, because they were already running out of money.
Well, they have a backup. Because in their case, they said the credit cards already were not working.
Yeah.
But they said but the Penske Media, which recently got involved with Vox, is said they're willing to step in and cover stuff if they have to.
Yeah. So that's
they for them and the people that work there, they might have a
payroll.
They might be saved there in that regard.
For now, but I think what's going to happen is they're going to have to look at this and be like, yeah, what?
That's just one company. How many?
Yeah, and they're going to have to cut back. They're probably going to have to cut back, and they're going to have to be like, yeah, we don't have the money to keep doing this anymore, to keep, bailing you guys out.
No, this Etsy pisses me off.
Yeah.
Because they're telling the people that sold on Etsy that they're not going to get their deposits. And like I said, a lot of these people on Etsy sellers are very small sellers, and they really decide if they get their extra money or they live or they pay their bills. So what Etsy's going to do is pass the buck down to the poor. They're going to take all the money from the vendors, all the people that made Etsy what it is, because it wouldn't be anybody or anything if it didn't have all the people selling on it. They're just not going to pay the people so they're basically stealing all the money from the people who get them paid in the first place. And to keep themselves in business, they're going to rip off all the poor little people.
Oh, I'm sure they will find a way to pay their executives. I'm sure they will.
And yes. This is where I have a problem. I mean, I guess you don't have the money because the money was on the bank and it's gone now. They can't pay people. But they owe these people the money.
Yeah.
I can't get groceries.
Yeah. And they're not going to disperse payments until they figure out what the hell's going on. We're working with our other payment partners to issue your deposit as soon as possible. Okay. That's very nebulous. As soon as possible. What if as soon as possible 6 months from now? Mm-hmm. What if they're just like, yep, you know what? We're just filing for Chapter 11 and you're never getting paid.
How much did Etsy have in there?
I don't think they said.
They didn't say.
The thing is, I think a lot of these companies aren't disclosing how much they actually
it'll freak people out more.
It will freak people out. They'll sell stock in that company or whatever, and that's what's going on too, because they said Roblox had 5% of its $3 billion with SVB. But
they have such little in there, it's not going to have an impact.
Right. Because if you're smart, you move it overseas.
Oh crap! This place had 3.3 billion invested.
3.3 billion. So again, this is going to be a domino effect. Once people find out who had money in that bank, and they find out that like, oh crap, this company I have stock in had half their money in this bank. I better sell. And then the dominoes keep falling over, and they keep falling over, and we don't know how bad this. I mean, this is like when the housing crisis happened. It happened in, what was it, like April or May, I think, of 2008. And it didn't hit the general public really until fall. And that's when a lot of like retailers started going out of business and stuff, because a lot of it is panic. People panic and they stop spending money because they're panicked. And
the economy's already led to a place where people will panic. Like if the economy was doing great and people weren't so worried, they might not panic as quickly. But because the economy's not doing great and you have so much inflation going on and everything else, people are like, crap, I can't afford to not have my money. And they freak out. Well, you didn't even trust banks for the longest time. You wouldn't put your money in banks.
Okay, so yeah, I didn't have an actual bank account until I was in my early 20s. I had lots and lots of money in a shoebox. I did. And I'll tell you why. It's because I grew up, my grandparents helped raise me, and my grandfather grew up during the Depression. And he saw what his family went through. And he said, don't trust banks. So God rest his soul. When my grandmother moved out of the house, right, they had to go around the house and find all the places that my grandfather had stored cash.
Yes, sure.
I am not kidding. He had fake outlets in the house with $1,000 in cash wadded up, stuffed in an outlet. He had jars of change down the basement. He had literally had money in his mattress. All of this was because he didn't trust banks, because he grew up during the Depression and he saw what happened. So he's like, make sure you have cash, because if you don't have it in your hand and there's a bank run, your money's gone. You're basically giving it to the bank, trusting the bank to not give it to somebody else.
Well, I think too, like I've heard stories that my mom would talk about how when she was a kid, they'd always would use cash, and they'd have cash in envelopes assigned to things. And, it was the mindset then was you don't spend a lot more than what you have. And I think in the way the economy has been, in the last 50 years or so, it's gotten to the place people are just so used to, virtual money, or, I put on my credit card. You don't actually register with yourself how little you have or how much you have unless you can see it. And I think that's the reason why, like, there was a long time, there's people that just used cash and they paid in envelopes, and they did that because they didn't overextend themselves.
My grandparents did for the longest time. I mean, they always had like just cash that would come out of nowhere. Like, hey, oh, how much is that? Okay. Then like they'd disappear and they'd come back with like,
they did. I remember
like
that.
$500, just to have it laying around the house. And I'm like, I'm lucky if I have $20 in my wallet.
I know.
At any point in time,
I know. I think it's a mindset, and I think that's why people are panicking, because you're basically playing Monopoly money every day.
Yeah,
and then the Monopoly money might be gone, and you're like, shit, I don't have anything tangible. I'm going to freak out.
Yeah, and that's what's going on now. This company here, this is Camp, a startup selling themed experiences and toys for children. They had fun with it. They took the post down because it's probably like, they said that the company currently has a sale related to SVB's collapse, since they have most of our company's cash assets held within the bank. According to CNN, Camp has been posting memes highlighting the sale, writing, "Our bank got shut down by regulators, so we're asking that you don't walk to our bank run sale."
That's funny.
Co-founder Ben Kaufman said that as a result of the sale, there's been an outpouring of customer support, which will hopefully
to be honest, I like the fact that they're embracing it. And you shouldn't make light of things. I get it. We keep doing it too, and we probably shouldn't. But the thing is, I think sometimes you have to laugh, or you'll just cry and wallow in sorrow and never get out of it. But I think it's cool that they're panicking, and instead of, they're trying to take a more lighthearted approach to it to try to see, and it worked. It worked for them,
Yeah. Compass Coffee, they said they can't make payroll. Slumberkins works with Apple Plus, so this is the thing, like, people don't realize, if you're in Hollywood, there are a handful of banks that deal with the majority of studios' money, right? Because this isn't like mom and pop. Oh, I got $10,000 in my checking account or whatever. This is like, I got like, hundreds of millions or billions of dollars and we need a place to stick it. So
I got a place. It's called my wallet.
yeah. So they worked with Apple Plus. Of course, Apple's going to be.
Once again, little companies. It's like the little companies, the mom and pop companies, the people working at these places that aren't going to get payroll. Credit card companies aren't going to be like, yeah, it's okay. You don't pay your bill. It's okay if you don't pay for your mortgage. Because, I understand the bank run happened and you didn't get paid from your business. You're still going to get dinged. And unless the government steps in, you're still expected to pay your bills even though you're not getting paid.
Yeah. So again, we're not going to know the full extent of it. I am telling you, as someone, an arbitrary opinion, maybe it's worth something, maybe it's not. But I'm telling you, as somebody who's been watching this stuff for 4 or 5 years now, this is going to be the end of a lot of these digital media companies that we've been talking about because they were not sustainable during the good times, and they're sure as hell not going to be sustainable now.
During the bad times, yeah.
So unless somebody's willing to pay you for your content, you're probably fucked.
That was the point, but we just took a long way around.
There we go. That's the long way around. So we're going to wrap this up.
Yep.
Please subscribe for more pop culture news, views, and rants, guys. We'll talk later.
Bye.